Okay, good morning. It is Wednesday the 28th of March, so I hope you're well. Just a quick recap. There's obviously quite a big turnaround in US equity sentiment in the last 48 hours. Firstly going up and then coming crashing back down with the Fang stocks in particular in focus. We're going to have a look at that and why exactly that particular tech area has come under some significant selling pressure. And then a few other things on the geopolitical front. Some movement on meetings between Kim Jongun and Chinese president, as well as an update on Brexit, and then the calendar for the look ahead. So that's what's on the agenda for this morning. First off then, just having a quick review of the charts, and I think the market's just kind of recapturing a bit of composure this morning after what was really a heavy late sell-off in the US. And so the DAX already on the back foot. The Eurex trade shuts at 9 p.m. in the futures, so a lot of that move was already caught at the tail end of that session, and we've kind of held on to those losses in terms of the European equity futures. The S&P also still remaining lower. But what's quite interesting about the S&P, here we were looking at this rally on Tuesday, or I should say on Monday, which was here. And then we've come all the way back, second half, kind of yesterday, complete reversal, net. We are pretty much exactly where we were, just Xing out a large portion of the volatility that we had seen through Monday session. So one of the things here is understanding why the market's turned around from a more, I guess, granular level. And again, this is when I kind of refer to the heat map, because it's just a nice summary way of seeing where the weakness is. And you can see here the technology space particularly heavy, and the reason why these blocks are different sizes is because the size of the block represents the market capitalization as well. So obviously Google, or what would be Alphabet as the parent company, Facebook, Microsoft, these are all big firms, of course, but you can see Google and Microsoft were down about 4.5% yesterday. Facebook shares were down about 5%. So pretty hefty losses. And that's kind of what people are talking about, certainly this morning. If I just quickly jump to really these headlines here, the Fang stocks together have tumbled 6%, and then what Bloomberg are calling an unprecedented sell-off. About 180 billion has been erased from combined market value, just to give you an idea. Now, this is called the NYSE Fang Plus Index. So again, Fang is the short abbreviation of Facebook, Amazon, Netflix, Google, and then there's also a few other names in addition, but tech-oriented. So having fallen 5.6% yesterday, it was the biggest rout in that data since going back to September 2014. To give you a bit of a flavour as well, it's not just been a sentiment play in regards to selling what has been a fairly overvalued sector. Just so you're aware, at 65 times earnings in mid-March, the tech sector, or particularly these Fang names, was valued almost 3 times more richly than the S&P 500. So there's been a significant outperformance in this sector, and as default then, there's room for quite a steep pullback given those high valuations. The Fang index advanced from early 2016 through the month's peak had reached an annualized rate of 67%, to give it some context. So huge movements to the upside, so some downside movement that we're experiencing at the moment, although it feels heavy and volatile. It is the sector that was kind of most susceptible to this type of downside momentum. It's not just about, as I said, sentiment though. There has been some single stock triggers. Twitter has been targeted by short sellers. This is often, if you're trading US single stocks, you'll see various notes get circulated, and that is one that's been out for Twitter more recently. Facebook's ongoing privacy scandal. To give you an idea, obviously we're coming towards quarter end in the next day or two, because markets will be closed for Good Friday, and Facebook is extending its losses to now its worst quarterly slide since 2012. Nvidia Corp's suspension of driving vehicle testing, and not to mention as well Tesla their new models, and a second probe into a recent car crash. I think it's in California. The authorities are investigating at the moment. So, a number of these names have had some isolated negative news in combination with the overvalued nature of the sector, means that what outperforms then underperforms in these types of market risk-off conditions. And as you can see here, this sell-off at the moment, the worst it's been in a long time for that particular sector. So if we get rid of those, going back to then a few other things for consideration, and these are the types of headlines that you're seeing in the news this morning, and it's looking at the historical precedents from when we've had negativity in US equity markets. The point being here is that if we look at this chart, it looks at corrections since 2009 have taken on average 200 days to fully recover, and the peak that we've had, so this is looking at the S&P, so let's just bring up the S&P for a second and have a look where exactly we are on a daily continuation from the peak to trough, if you like. So give me 1 second, I'll just mark this up. So the all-time high down to where we are at the moment, so you can see here this is that kind of 10% range, so earmarking then an official correction territory. And the last time, the last previous times we were in this kind of situation, it took 417 days before we then broke back to the point of when we got above the initial point of falling. This was in 2015 to 2016. It'd take 97 days in 2012, 144 days same year, 125 days. So net result is, I'd say this one's a bit of an outline, probably skews the data set slightly, but 200 days. It's only been 60. So what this statistic would suggest is that we might have an extended period here of consolidation between where we are now and the recent all-time high that we had just a few weeks ago. Because to get back up to those levels and then take on the 3,000 level again, if it was done in 60 days, which it is at the moment, that would be incredibly short turnaround comparative to what history in recent years, in the last decade, has shown us. Interesting note would be if we continue to be on the downside. Obviously the risk is what we've been talking about the last couple of days, about the heightened trade rhetoric, particularly coming out of Trump. I just question how long or how further he will follow that through, just given a lot of this is political posturing, of course, as we've discussed before, from the US. One of the other things here, the S&P 500 has posted 22 days of 1% moves since January, triple that of 2017's total. What's been absolutely great, I guess, from an intraday trading point of view, is that 2017, particularly Q4 of 2017, was absolutely dull in terms of market movement. It sucked big time in terms of trying to generate market movement, news-driven events. But as we know, 2018, you've had changing of the head of the Fed, you've got Trump looking to push his next policies through, you've got the trade war situation, you've got the Fed, will they, won't they, how aggressively hike interest rates, you've got Brexit starting to heat up, and all this stuff has obviously created renewed volatility, and of course comes with equity markets at very high valuations as well. And so a bit of a shakeout here might have been expected at some point or another, given, as you can see, the lack of movement that we were seeing in volatility more recently. To give you an idea, the VIX index is now at around 22.5. It rose yesterday for the third time in 4 days. The measure, that's the VIX, is nearly twice its level of the previous 2 years, to give you an idea. So in a comparative terms of volatility, measured on that basis. Okay, next thing to have a look at, of course, because equities are coming under some pressure, is you're probably reading headlines like this: Treasury markets then getting a bit of a boost. And this is financial markets really, where just when you think you've got a bit of a handle about the overall direction of, say, economic data, and as a consequence then the decision making from the Fed. We were talking probably about 6 or 8 weeks ago. Do you remember Goldman Sachs? We're going to have 5 interest rate hikes, they were saying, potentially, for 2018. That now seems a real distant memory. A bit like Goldman's call to go long gold yesterday, and it dumped about $15, but we'll move on. But Treasuries have been taking a really strong move to the upside, and actually right on cue you can see the US 10-year printing session highs. The Bund is up 43 ticks. So just having a quick look at these fixed income instruments. I mean, let's have a look on the US 10-year. You know, it's being supported by this equity sell-off, and Bunds have followed suit. You know, this idea that we were going to go through a quite sped up phase of monetary tightening seems to be a conversation that's been severely put on the back burner now. And if we look at the US 10-year, it's coming up to quite an interesting point, and the upper bound of the range that's been in play, really going back to the beginning of February. You can see that double kind of top area of price activity from going back to late Feb to mid-March. Obviously we've got the R1 level to surmount in the interim period, but keep an eye on that 121.09 level today. It could be quite interesting. And then Bunds obviously have been following suit in the recent price activity and continue to claw back some of the losses seen more recently. The technical point here to be aware of with the US 10-year is, this is what quite a few people are looking at, is the yield in US 10s is set to close below the 50-day average for the first time in 2018. So this is kind of the flip reverse then of the chart we were just looking at. If you're looking at the yield here at that level, and then as I said, looking at the US 10-year at the level here, we've been trading in that top end of the range. Alright, a few other headlines to get you up to speed on. That was what I was looking at here in the 10-year. A few other headlines, and then I'll hand you over to Sam. So, whilst people are panicking in the equity market, there is some positive news. Kim Jong-un is willing to hold a summit with the US, according to China. You might have seen photos. They've been in talks, and it's led to Kim Jong-un willing to talk to President Donald Trump about giving up its nuclear weapons, China said, after North Korean leader made a surprising visit to Beijing. And so, yeah, this is, don't forget, this is Kim Jong-un's first time since taking over in power in 2011 that he's made any foreign trip, that he's actually left the land of North Korea. And now he's talking about giving up his nuclear weaponry, and he wants to meet Donald Trump. So, obviously, words are words, and we'll see what comes of it when the two powers do meet. But obviously this is a positive step on that front, on the de-escalation of the tensions in the Korean Peninsula, and also some of the relationship building between China and the US. Obviously from China's point of view, if you're going to get heavily penalized by the US administration's tariff policy and the protectionism, then what do? All of a sudden you come out with a magical solution to North Korea, and you say, how about that, US? We've just resolved one of your biggest headaches, so why don't you just pipe down with your trade tariffs? You know, this is how the world works. So quite interesting timing, I would say, that all of a sudden Kim Jong-un is talking like the friendly neighbor just when the US tightened the ratchet on China on the trade side. I don't think these things are coincidental. Alright, actually this was just one comment, actually just flicking back quickly to the tech focus. I thought this was a great summary in one line of what's going on with the tech names at the moment. This is a chap at Pictet Asset Management. He said the value of many tech names is based almost entirely on intangibles like reputation and brand. So regulation can have a huge impact. Now that's one of the things that's led to this overvalued nature of those particular companies. I mean, take Tesla for one. You know, actually produces an absolutely minimal amount of cars, and yet their stock price, they're bigger than Ford Motor. And it's not that they have the physical turnaround of the selling of products. It's this idea of brand and reputation. You know, names like Apple, for example, which obviously sells a phenomenal amount of products, but Facebook, obviously, it's the regulatory response which is the most concerning at this point in time. So just quite an interesting way of summarizing. I think that hits the nail right on the head. All right, a few other things. You've had the crude oil inventories last night, and really there's been very little response. And actually, if I look at the chart, equities are just looking a little heavy again this morning. Keep an eye on that DAX. You can see here, center left, getting close to retesting that low point just before the Eurex close. It comes with the S&P testing that kind of similar price point at the moment. Consequently, you can see there that T-note levels already just being tested, that 09. So some decent technical levels just being tested right now as I'm speaking. But oil remaining heavy. Last night what you did have was a build of 5.321 million. This was way bigger than expected, which was under a million is what the markets were anticipating. A build in Cushing, 1.6. Gasoline, though, was a draw of near 5.8 million, and distillate was also a draw. But the headline was a build. Minimal movement, really, from overnight. Crude a little heavy this morning, also take into consideration the dollar's a little bit firmer. On the Brexit front, a few people talking about this Times newspaper report. Now, this is a source in the Times, and so the Irish officials have been told to expect new plans imminently from Britain on how it plans to avoid a post-Brexit hard border. If you remember, the agreement we had last week is that they've basically agreed to a backstop that if all else fails, then Northern Ireland will continue to remain in the customs union and so on and so forth. But what's happened here is that the British government haven't actually come forward with a more definitive, concrete clarity of the solutions yet. There's been some tabled, but nothing with real concrete that Europe's agreed with thus far. Sources have told the Times that officials have been promised exactly this: concrete details on what alternative plans the UK government has beyond the so-called backstop. Now, obviously, if they did come out with something quite radical and something that would appease both sides, i.e. Britain and the support of the likes of the DUP, that obviously contributes to the working government of the Tory party, but then also satisfying the Irish, i.e. south of the border, this would definitely be a sterling positive. But I still fail to see what exactly it is that they can come up with at this point. And certainly with such a tight turnaround that they didn't have a solution on Friday. And what we're saying now, Wednesday, they've all of a sudden got a solution. I think this is just a little bit of political, again, show of hand from Britain in that they want to move things forward, and that they're looking at solutions to this problem, which still is a major sticking point. Okay, quick look at the calendar. There's not too much going on this morning that I think that you need to be aware of from an economic data point of view. Into the US, this is final Q4 GDP, so don't forget, we're almost in April. This is Q4 US GDP, so it's the final revision, which often or not is a non-event, because it's just a refinement of the data in that respect. You do have the PCE data coming out, but again, it's a similar reading. In that respect, you've got trade balance data to be aware of and wholesale inventory, so quite a cluster of data coming out for 1:30. So I certainly would, even irrespective of what I just said, be mindful of probably clearing out positions at around that time, just in case. And then you've got pending home sales later in the afternoon, and then your DOE oil inventories to follow on from the APIs last night. From a Fed perspective, you do have a speaker, Bostic, but has been speaking pretty much day after day, more recently this week. So markets are pretty much factored in the view at this point. All right, that's it from me. Let me hand you over to Sam, and he can wrap things up from a technical point of view.
Yeah, thanks, Ant. It's good to see in this morning in the trading live chat. It's been quite busy. There's quite a lot going on, and just as we Well, just as I come to the desk, you can see here, middle right chart, and I'll use this one going forward. You can see S&P just coming to what was a previous, well, the low of the day, and just breaking through there. Pretty important level to see if we can get sustained break, and then next we know it's sort of coming down to the low we made yesterday. In terms of this going forward, and I did put this into the chat, you're going to want to have this moving average, the 200-day moving average. Let me just get that up on the chart here. I'm just going to clear everything off, and let me just put that on moving average. 1 second. So it's been quite well respected, as I'm sure you've all sort of seen over the last few days, and you can see again the beginning of, well, the end of last week it acted really well. So I'd have that at least on one of the charts going forward to see if we can sustain another hold above, or if in fact we do get a break below, and then it could be the sentiment really then does change, and we look to continue a push lower through there. So one to keep an eye on today. If we had a day like yesterday, we'll close well below. So just worth having that on there on the daily chart. Going back to today, on a 15-minute, you can see we're just testing that low, and it's same for the Dow Jones and the Nasdaq as well. Just worth getting a trend line on these levels. Going from the low of Monday, you can see we still haven't quite tested that, but if you go from yesterday's low instead, you can see we're just starting to get a breakthrough there now. So let me just get that on a bit there. You can see the Dow Jones is coming lower, breaking through that sort of trend line to the downside, and the Nasdaq, it's going to look quite similar with a break of that trend. So stocks definitely on the back foot here. Dollar strengthening as well this morning, although having a bit of a pullback now. Let's have a quick look over. We'll start off with cables. You can see, well, yesterday had a pretty big day to the downside. Cable this morning found really good resistance on what was a previous low, so good support around here. Then we broke through and found a good piece of resistance, and then also you have a trend line going on from those lows as well. It might well be worth keeping that on for any sort of move potentially higher later on. So you can see it was really nicely respected, good area of support, breaks through resistance once, twice, 3 times, and we've had quite a sharp bounce. However, in cable we're now back towards the pivot area. Have a quick look over at euro as well, and similar as well. Hit yesterday's low, albeit had a tiny bit of a pop through, and we've sort of come back to the levels that we were well, not too long ago. So Aussie dollar going to be one to keep an eye on. Let me just, because this, as Michael put in the chat, is the lowest it has been for quite some time. So I'm just going to put here so you can see daily chart. If I draw a line on where we're trading now, 21st of December, so lowest for the year currently trading for Aussie dollar. In terms of key really sort of market levels, let me just remove the pivots to clear it up. You can see, I guess that real move that we found support in the middle of December really started around here. Could we get there? Probably not really, would say today, but this whole area in the past has been really well respected. Good support in November, then resistance once we broke through before breaking through again, obviously as mentioned, in the middle of December. So I'd be keeping an eye on this level for Aussie dollar there. You've probably got a decent trend line coming down from the lows that we have been making as well. That could line up quite nicely maybe over the next couple of days. So I would expect a bit of support around there for Aussie dollar, but if the US dollar really does start strengthening and you know, iron ore prices keep dropping, could be that in fact Aussie dollar continues to push lower and we actually get a test of those December lows. Nasdaq, Euro stocks, Dow, S&P, FTSE and DAX all pushing lower right now, so one to keep an eye on across the board here for stocks. Have a quick look over at gold, which is quite interesting. Obviously with the dollar strength this morning, you had that pushing down, and however with stocks then now pushing down as well, we've had a bit of a bounce. So really I would treat this as you know, the S1 level is just more of a strong technical place, and if you're going to get the dollar really start to strengthen, yet you can get a break through the S1, and you want to be aware of then the lows that we had here back on the 23rd and previous highs around here. Let me just draw a couple lines up, but for now with stocks on their lows. Gold just finding a bit of support here. Oil pushing lower as well. Probably worth having this trend line on that we can see we broke through. It's a bit rough, but you can see it's held quite well, albeit a couple of sort of false breakouts of that level. Also had a good test here. Let me just refresh this chart just to clean up a bit. What was the sort of the low of the afternoon, the 23rd, held quite well around here. So good area of support, breakthrough there. Then obviously you can see the key level here, the low of that 22nd, and then all around here. Let me just get a rectangle just to clear that up, and I'll move it into the main part of the chart. All around here, $64. Of course, with it being Wednesday, and that's the usual time, 3:30, you've got oil. The figures coming out, the main release for the week, so perhaps would be sort of sitting on my hands for oil definitely until the afternoon anyway, before making a real decision there going forward. Have a quick look over at T notes, which you can see really there it was pushing on this morning, but now just come to that R1, and this is, again, let's put this on a longer time frame. Really key area. I was looking at this yesterday, I didn't quite think we'd get there as soon as we have, but you can see just how important this area has been. You had a sort of, I guess, a bit of a test on Valentine's Day, then beginning of March, once, twice, 3, 4, and now the 5th time of that key level. So one to keep an eye on going forward here for T notes. Let's have a quick look over at the Bund as well. Just put this on a shorter time frame. So again, quite one directional really for the Bund there as well. Just coming, let's put this on 15 minutes, just coming up to that R1 in a similar sort of fashion. In terms of looking for retracement, you've got to have yesterday's high marked up as a key level. If we were to perhaps push down gradually, you can see, and I'm just going to put this onto a 5-minute chart and just rectangle the area. This is where the move really started this morning. It was good resistance and breakthrough, and that's when you see the candles really pick up. So be keeping an eye on this. Perhaps it's something more to look at later on in the week. But if today, I would expect some good support around there from a technical point of view. So dollar just coming off a bit from its sort of strongest levels of the morning. Equities near their lows. Keep an eye on that 200-day moving average. Keep an eye on the FTSE as well. Here you've got a decent trend line. Let me just put this on a 120-minute chart. I'll be aware of this. Let me get it there, low, the 23rd. Been quite well respected again on the 23rd, and then on the Monday as well. Can we get a test of that level perhaps later today as well? On the open, it did push higher, only to come back down, where we had quite a good level of support before breaking through last night. It's actually quite well with the pivot as a resistance level. So stocks lower, dollar just recovering a tiny bit. One that's going to be quite tricky to trade today, and I would say is probably best to wait for either break higher or lower, is going to be dollar yen. And you can see, well, look at that, just how choppy that has been today. No real direction, very sort of range bound, if you like. For me, let me put this on a 60-minute chart. I guess you've got to mark up, well, you get a rectangle. This area below is a good area of support, using the highs from Friday and Monday before we broke through, and the lows of yesterday. That's going to be sort of key support. And then to the upside, well, a high of the 22nd morning, and then high of yesterday. I'd really only be interested in those sort of levels, I think, going forward, with the correlations acting as they are, because obviously you've got the dollar strength this morning, but then you've got equities coming down, so you've got that sort of well, which way should it go kind of scenario there. Any questions, obviously, please do get them in the chat. Things are been moving quite nicely this morning, just getting a bit of a pullback on the dollar, but one to keep an eye on definitely is going to be that 200-day moving average for the S&P. Can we get another test of that, and can we, perhaps more importantly, get a close below? Have a good day, and I'll catch you later on.